Netflix is expected to report EPS growth of 16.9% in the third quarter. However, a number of analysts have downgraded their outlook on the stock in the run-up to the earnings release, including Goldman Sachs and UBS. Shares in Netflix are down by about 25% since its second quarter earnings saw subscriber growth miss expectations. Joining me to discuss is Dan Ives, Head of Tech Research at Wedbush. Dan, good to see you as always. Is there still reason to be excited by Netflix given all that competition that we're seeing from the likes of Disney and Apple? We know their streaming services are coming out very, very soon.
Yeah, ultimately, I think it's really become went from background noise to a reality for Netflix. I think you've seen a lot of pressure in terms of sub growth, and ultimately it's going to get a lot hotter in the kitchen with Apple as well as Disney come with streaming services, over the coming month. And I think that's why this is a key pivotal earnings quarter for Netflix to start to regain some street cred.
There's been suggestions that we could see a miss to that subscriber growth guidance number. What are you expecting there? And is that the key number for you?
International sub growth is the key. When you look at that sort of bogey in the 6 million sub area, look, last quarter was a big wake-up call for the bulls. I think it just shows it comes down to pricing. You look at pricing, what's happening across the board with Apple's pricing, with Disney's pricing. It's going to be tough for Netflix to keep these pricing tiers, and ultimately it comes down to sub growth. And I think this time as we go into 2020, it could be some more pain ahead.
What about the domestic US subscriber growth figure as well? Because that was a mega miss last quarter and really weighed on the share price in the second quarter.
There's going to be. And I think it comes down to you look at those step-ups in pricing. It obviously does come down to content. You look at what type of content hits they've had, that continues to diminish a bit. But that's why right now there's going to be a laser focus on that domestic number to see growth there, but of course international. And this is really sort of the drum roll into Apple and Disney coming out with their streaming services. That's why right now they're no longer the only house on the block.
When we look at the share price of Netflix, it's really been underperforming the benchmark S&P 500 a lot this year. Do you think it's justified?
I think it's justified in terms of sub growth. It's justified in terms of ultimately the earnings trajectory when you look out and the appetite for risk. I think when you look at FANGs, you'd rather own here an Apple or an Amazon than a Netflix in terms of our opinion on a large cap. I'd rather own a Microsoft rather than a Netflix. And I think that's why you look at streaming. It's very tough for the street to be incrementally bullish on Netflix, given what you're seeing in sub growth and given what you're seeing now with Iger, Disney, and then Cook and Apple coming around the pike.
We've seen a number of Wall Street analysts downgrade their outlook on the stock just recently. Where do you stand in terms of your recommendation?
Yeah, look, overall, as a firm, we continue to be cautious on Netflix. I think right now it's hard to pound the table bullish, just given what you're seeing in terms of sub growth, streaming, as well as pricing. So, our clients, we continue on FANG. We'd rather own an Apple over a Netflix, especially going into earnings. And given our view of sort of streaming here, where it's going to get a lot more competitive over the coming months.
So you mentioned Apple there. Netflix really kicking off the tech sector's earnings here. Which stocks would you say would emerge as the winners across the quarter? You mentioned Apple. Any others?
I think Apple, Microsoft, and then potentially Amazon from a cloud perspective. Those are the ones that stick out. And I think Apple's one I'd really highlight here in terms of what's happened on iPhone 11, where I think they're tracking about 20% above expectations in China. You've seen a lot of these high flyer names in software cut 30, 40%. I think you can see a rally on some of these names going into year end. It comes down to the appetite for risk. I think you're starting to see more appetite for risk go into year end. And obviously a lot of it depends on the US-China trade war.
Yeah, so does Apple remain your top pick in the US tech sector? Because, of course, there is that cloud around the trade tensions that you just mentioned there.
Apple continues to be our top pick here with iPhone 11 as that's tracking above expectations. You got the services coming on board in terms of some of the parts valuation. This continues to be the name. Despite many of our peers yelling fire in the crowd theater, I think this is a stock that's going to continue to go up and to the right.
All right, Dan, thank you so much for your time.
Thank you.
That was Dan Ives, Head of Tech Research at Wedbush. Now remember, Netflix is an all-session stock, meaning you can trade the earnings in real time on the IG platform as the results hit the wires on Wednesday. I'm Victoria Scholar, and thanks so much for watching IGTV.